All right, what is going on, guys? It is Jon Fibonacci, and this is Turtle Soup. All right, so I've known about this for a while now. It's been a few years, and with the things that I teach, I don't directly call it a turtle soup because this particular pattern is actually specific, and I don't necessarily go with the exact specifications, so I just avoid calling it turtle soup altogether. So what I do in my own personal trading and my own explanations of price is essentially I just blanket a statement and call it market manipulation. It's exactly what I think it is. It's what I believe it is, and I just leave it at that. So certain people have different names for certain things, and I don't really see a reason to, name like take certain things and rename it or stuff like that. So even though a lot of my trading, when it comes to market manipulation, is pretty much an advanced version of what turtle soup actually is. All right. So we'll go ahead and get right into it. So today we're going to be discussing the turtle soup pattern. All right, so what exactly is the turtle soup pattern? But before we get into that, we have to give credit where it's due. Okay, so the origin of this subject is Street Smarts by Lawrence Connors and Linda Rasch. May their work be recognized, appreciated, and never forgotten. It is recommended that you purchase a copy of this book and to always credit authors, educators, and mentors. So again, this is where this pattern is where it originated. All right. So it's in there, and Larry Williams is in here as well. So there's some conversations between him and either Lawrence or him and Linda. I think it's Linda. I'm not too sure, but there it is. All right, so it's in there. I actually just got done rereading that portion of this book yesterday, actually. So there it is. All right, there it is. This type of trading has been modified from its original form. Not reinventing any wheels here, just advancing what was introduced many years ago. The concept of the turtle soup pattern, although described on the daily time frame, can be seen and utilized on other time frames. For demonstration purposes, we will only be looking at the daily. Smaller or larger time frame studies are for your own time. So what we're actually going to be looking at today is Halliburton and U.S. oil. But with this year and having oil, basically contracts went negative for the first time in history. The entire oil market was down. It was crazy. It was a crazy year. All right. And it's 2020. All right. So you already kind of know what other things happened this year. But with oil specifically, it dragged down a lot of stocks with it, and one of them being Halliburton. So very unique opportunities this year. Halliburton really took a hit and essentially went down to $4, $5, $6 a share. So yes, we are going to be taking a look at Halliburton and U.S. oil. So now the reason for this is because Halliburton's stock price, in my opinion, it correlates with the price of oil. Right, so if oil goes down, Halliburton goes down. If oil goes up, hopefully Halliburton goes up as well. And you can kind of see that in this chart. Let's see if we can pull up. Right, you see both charts kind of going down together, going up together, down together, and then up together again. So generally, they correlate. Now, is it going to be exact down to the T every single day? No, it may not do that. But overall, in a general sense, yes, they're pretty heavily correlated, in my opinion. All right. So basically what the turtle soup pattern is, of course, I want you to purchase the book and go read it. But basically, when there's a new low that formed within 20 days, so don't focus on the top chart just yet. The top chart is Halliburton, and the bottom chart is oil. All right. So oil here on this particular day right here. All right. Oil made a new 20-day low, right? From this day here, 20 days previously. So looking back 20 days, this was the low. Okay. So it made a new low here. And if you were to look at Halliburton in the same way, meaning lining up together, right? So on this day, comparing it with this day, all right, you can see somewhat of a discrepancy here. So what I mean by that is oil makes a new low here. Okay, and again, daily time frame, looking back 20 days as per the turtle soup pattern. Okay, based on the description and the way that I understand it personally, this would be a new low. All right. So looking at Halliburton, let's analyze the chart and see if Halliburton is doing the same thing. So Halliburton, if it correlates heavily with oil, which again I believe it does, if it wants to follow suit, then Halliburton should also be making a lower low here, right? But it doesn't do that. It actually closes higher and then trades higher away from that. So in a way, in my opinion, this would be bullish for Halliburton, right? If oil's going lower, but Halliburton is going higher, then that means Halliburton is most likely being professionally accumulated. Now that's coming from Larry Williams, actually. And I know there's a lot of mentors that I have. Okay. There's a lot of books that you can reference. George Angel, Larry Williams. I mean, the list goes on, and you can actually check it out on my Instagram at Jon Fibonacci. All right. But anyways, let's come back to it. So professional accumulation is when you see something essentially like how it is on the chart. Okay. So Halliburton not going lower, Halliburton going higher here as oil is going lower. So this essentially would be a turtle soup pattern where now the market is pretty much getting ready to reverse. Now, the timing on this is a little bit different because now you're at the end of October, and then November is like a day or two after that, right? So with the new month forming, there's a one of these right in here. All right, so we'll get to that in a second, but I am a little bit ahead of myself, so we do need to catch up on the slides. All right, so let's just pull this up real quick, just so you guys can see what I'm talking about. Oil going lower here, breaking that 20-day low. At the same time, Halliburton was going higher. So here is your here's a visual for the people who were kind of struggling to see what it was that I was talking about. There it is. All right. So with the November candle starting, right? So October ends, November starts. There is one more run on stops at the open of the new month. So essentially that's what I believe it is the market running stop losses. All right. So what does that mean? It means, well, if there are traders who are in a long position, right? Because everyone was, oil's crashing, we need to buy oil and this and that. Well, if they are in a profitable position, or they could even be dollar cost averaging for some people who may just be buying every week or every couple of weeks, on some type of plan like that. Then, or even the people who are in a long position that are profitable, a lot of traders seem to place their stops below recent lows and things like that. So, well, there it is. Okay, so the market comes down, basically sweeping those stops and then reversing. So now how can you tell at the time being? Now, at the time, like right as it's happening, sometimes it can be a little bit difficult to tell at first. You have to really know what you're looking for. All right. But in hindsight, that's what this is. In hindsight, look at the wick of that candle, right? This candle here. Okay. Notice the body and then notice the wick. So you see how the opening price, right? Price opened and then significantly went lower, but by the end of the day rallied higher and it actually closed green. So a lot of people who had their stop either at this low, or this low pretty much got swept within these couple of days, and then the market rallies away and reverses. So that essentially here is the turtle soup pattern. All right, it's a new low forming and then price reversing. Now, according to the book, the way that they would buy it is essentially with a buy stop, and I don't know. I'd have to go into the smaller time frames to see if the buy stop was actually triggered before the stop run or after. I don't know. But if they were to have a buy stop, depending on how price action actually unfolded during this day, they might have gotten stopped out on this first initial day and potentially gotten in at a later date. I don't know, because I don't know what the intraday here is. But nonetheless, this is what I call price manipulation, because that's essentially what it is. And I don't see a point in calling it anything else than for what it is. All right. So big, heavy market manipulation here. And that's a wrap. Okay. So now let's talk about Halliburton, right? Halliburton was a stock that I traded this year. It was it was the longest trade of the year, personally for my trading. And this is what Halliburton did after that whole thing I just showed you on the last slide, where here it's the same chart. It's just now Halliburton's on the bottom and oil's at the top, but we zoomed out a little bit more. Okay. So you can see these lows here and even this low back here from oil, right? Go into your own charts and look at this low here as well. This low, even though this was well past 20 days, you could probably pull up a weekly chart and see how many weeks ago that was, or possibly even a monthly. But nonetheless, low here, low right here, low right here, swept right there. So with oil going lower, and even on a closing basis, Halliburton is not going lower, so that would be bullish for Halliburton. And you can tell that Halliburton essentially went from $11. I went ahead and just threw on the $12 mark just to show you. The next couple of months, from the beginning of November until the middle of December, it ran from the 11s, possibly the 12s, or maybe 13 area, right up to $20. I believe the high was like 20 and a half, maybe. I'm not sure. But $20 was a price target that I was mentioning back in March of this year. So there it is. Now, I know what some of you are thinking. Maybe you don't believe me, or maybe you don't watch me as an educator as part of the I Am Mastery Academy, and that's fine. But of course, I'll show you proof. So let's just get into it. Here it is. Okay. So I actually did my last bit of buying at 681. All right. So here it is on the left side. I've got my Robinhood account here, screenshot. There it is. Halliburton order status filled, submitted March 25th of this year. It was a day trade. And I entered shares, and it was filled at 10:27 a.m. Central, which would be 11:27 a.m. New York. And my shares were filled at a price of $6.81. So I was off. I was off by like 7 days or 8 days from the actual low of the year. So, not the very, very low, but pretty close to it, if you ask me. All right. So nonetheless, $12 was still a good buying opportunity to get to $20, and even the options were going crazy November and December. Some of the January call options were going insane to the upside, but nonetheless, I wasn't a part of those for very long. I did take some contracts earlier in the year, talking about the call options. All right. So at the beginning of the year, yeah, Halliburton did run quickly up to about 16 and some change here, and then we pulled back a little bit, and then we were really just not doing a whole lot until the end of the year, and then we finally boomed up to $20. So I actually sold it before it got to 20. I just wasn't patient enough. All right, even though I said 20 all year, once it started its rally, phenomenal rally here, I went ahead and sold into the up movement. So it is what it is. I got out early, and that's just what I did. All right, so I can't change reality. There it is. All right, so this is the last thing that I want to go over before we shut it down for today. So this is how I view the market. Okay, beginners, right, especially with like free learning websites and things like that, you can identify a downtrend by lower lows, right? And that's the way I learned it too. A downtrend is lower highs and lower lows, which in turn is hard to argue with, but yet I don't take that for what it is. And I take it a little bit further by saying, however, lower lows do not indicate a downtrend. And so what do I mean by that? Well, if you look at the turtle soup pattern for what it is, I mean, here is oil. All right. At the same time, we just got done discussing with Halliburton and oil. This is that same run, that same new low. So when you look at this chart, you do have lower highs and lower lows, right? You have a high here, a lower high here. You have a low here, and then a lower low here. So by definition, if you were to take this part of the chart and erase it and just see this portion here, you would think that Halliburton is in a downtrend, and on small time frame, I guess you could say it is, but realistically, this created the low in November, not the low. I don't think it was the low for the year, but it was a low in November, and then rallied up to $49 for oil. So this is what I mean. Like, I don't look at a new low as a downtrend. I look at a new low as a potential buying opportunity. And essentially that's one of the ways that I am able to catch market bottoms, and it works the same way for market tops. So if you ever go, like seriously, if you ever go into a chart and look at major highs and major lows, look to the left, look at the price history and see what it did before that. Like, as the high formed or as the low formed, what was it doing? Probably making a higher high or a lower low, right? Which makes sense because obviously the low of the year would have been a lower low. But it's context, right? It's context. It's knowing that, hey, this is not a downtrend. This is a run on stops, because oil was in a bull market. And you want to buy retracements in bull markets, right? But how do you do that without buying a lower low? You see what I'm saying? That's the logic that I have anyways. So if you get it wrong, I mean, yeah, you can burn yourself. You can definitely burn yourself by doing that and getting it wrong. But it's all about context. So for me, it's, okay, what's the higher time frame doing? What are the professionals doing? And whatever they're doing, I want to match that. So if I'm wrong, I'll know within, a short amount of time to get out. Or if I'm right on the longer term time frame, then I know that I can hold trades for months and months and potentially get some superstar trades. Or in other terms I like to use is a whale trade. All right. Because that comes from the saying, you teach a man to fish and he feeds himself for his lifetime, right? Versus just feeding a man a fish and he eats for a day. Well, the biggest fish that I can think of is a whale. So the biggest trade I can think of would be a whale trade, All right. So anyways, that is going to be it, guys. So thanks for watching. Again, if you want to support the authors in their work, that is Street Smarts by Lawrence Connors and Linda Rasch. All right. So thanks, guys, for watching. Please like and subscribe. I would appreciate that. Leave me a comment. Let me know what you think, and have a blessed rest of your day.